on. Now it is on. The, seeing no corrections or additions to the minutes, the minutes will stand approved as presented. So, we are going to begin with Senate File 255. Is that correct?
No, that's the minutes. That's the minutes, not the agenda. That's,
Oh, that's last, I'm sorry, looking at the wrong thing. We've had so many kind of glitches this morning. No, what we have is the Commissioner of Revenue. Welcome to the committee, Commissioner Marquardt and Ms. Bears. If you'd identify yourself for the record, we're pleased to hear your presentation of the governor's budget proposal. We have informed the members that we're not taking testimony this morning. We don't have language for a bill. When we do get that language, and we'll have another hearing on the actual tax provisions, and we'll take testimony at that time. Commissioner Marquardt.
Well, good morning, Madam Chair and members of the committee. I am Paul Marquardt, the Commissioner of Revenue, and I'm joined here at the table by our Legislative Director, Joanna Bears. And I just want to remind all the members, for starters, that yesterday was the beginning of tax filing season, just as a quick reminder for everyone. So, Madam Chair and members, I'm honored to be able to present Governor Walz's and Lieutenant Governor Flanagan's tax proposals as it relates to their overall budget presentation. And as you can see here, the governor provided a very responsible, measured, and honest budget, and with the main goal of trying to solve the structural deficit. And actually, if you look at 28-29, the overall budget solves half of that, $1.76 billion out of $3.5 billion long-term structural deficit. And that is really a key if we're going to get the budget in protecting important investments into the future. And part of that is creating a more fair and more stable tax code. So if we can move to the governor's budget recommendations for taxes. So the governor is proposing a long overdue improvement to the sales tax code. And what he and Lieutenant Governor is doing is lowering the statewide sales tax rate and then expanding it to more services. So just kind of take you through here. It decreases the state general sales tax by 0.075, and technically the sales tax is 6.5%. So it's actually the 6.5 down to 6.425. But you see, I put that in parentheses. In effect, for the taxpayer, it's 6.875 to 6.8%, because that 0.375% of the legacy funding, that is not impacted. That's on, that 0.375 is on top of the regular general sales tax of 6.5. And so technically that is what is being cut, but the net effect. So of course that would be the first sales tax rate cut in state history. And just the rate cut alone is a $95 million cut. It's about 1.1% cut of sales taxes. It also broadens the base by extending sales taxes to a number of professional services. As you can see there, legal, brokerage, banking, and accounting. There are some carve-outs, as you can also see. So if you are filing for the child tax credit or the working family credit, that still would be tax exempt. If you're going to legal aid, tax exempt. If there's certain pension services, would still be tax exempt, as would bank overdraft and late fees. I think an important part of the proposal from the governor and lieutenant governor is that there are no business to business sales taxes here, or increases to that. And in some past proposals that have looked at sales tax reform, they rely heavily on the business-to-business taxes. And this this proposal would not do that. And the main reason is that when you tax business-to-business, you're really taxing businesses' inputs and production. And that ends up getting passed down to the consumer in hidden layered cost, which is called tax pyramiding in tax speak, so to speak, and gets passed on to the consumer. So, for example, if you are a farmer and you hire an accountant to do the accounting on your farm operation, that is still tax exempt. If I'm a business, a manufacturer, and I hire an attorney, that is still tax exempt. But those businesses and the farmer will see the new tax rate cut and could pass that on to the consumers. So there is no business-to-business taxes. It would be effective after December 30th of 2025, and combined, the total revenue that is raised is $185 million in the first biennium and about $236 in the
Commissioner?
second biennium.
I think we may have some questions about just that one. If we could just pause for a minute if there are questions. And I will start. So what if an attorney offers his or her services pro bono, and then on the side charges that same client a fee? How does that transaction or relationship escape the sales tax?
Madam Chair, members, my understanding is that a fee would be taxable.
The fee itself would be
Yeah,
taxable.
that would be taxable.
Even if the arrangement between the attorney and the client is pro bono.
So, Madam Chair, members, it would depend on, it could depend on the arrangement of how that is done. And I suppose.
And I am reminded during a Palenti administration where in order to solve or resolve, wasn't a solution, but a resolution, we imposed a fee on tobacco and did not call it, it was not part of the tobacco tax. And I'm just wondering if we're looking at issues of semantics or is that defined separately in the statutes? That's one question. And then secondly, we know it's a violation of streamline to have anything other than one state rate. And the 375 is not the state rate, as you very particularly point out here. But what happens if we said that it would only be, would it be a violation of streamline if we said that it would only be imposed on, we'll say fees or services, we'll take that distinction away, of over $1,000?
Madam Chair and members, I'm not the expert on streamlining, and so I don't know the answer to that.
When the language comes to us, I think we're going to look very carefully about what all that means, and the exceptions that are given here are taken into account they'll be taken into account in the revenue estimate. Is that clear?
Madam Chair,
Right?
and members of the committee, the carve-outs are taken into account for the revenue estimates.
And then the reduction in, the effect of the reduction in the sales tax will include all of these exceptions that you are listening here. Now, people may be for this or against this, but I think the thing that is really, really important is that we all understand what it means. What will be taxed, what will not be taxed in a governor's proposal, and what the impact of that is, and how can, because it is perfectly legal to avoid taxes. What is not legal is to evade them. So I'll be looking for, how can someone in those, quote, your and the governor's word, wealth services, how can they avoid these taxes? And when we get to that and they testify, we're going to ask them extremely pointed questions about that. Just maybe it's okay and maybe it's not, you know. Okay, Senator Miller.
Thank you, Madam Chair. Commissioner, so the governor is proposing the first sales tax cut in state history. But by expanding what is being taxed, is there additional revenue that will be raised from this? And if so, how much more?
Yes, so, Madam
Commissioner
Chair,
Marquardt.
and
Thank
Senator
you,
Miller,
Senator
so, yes, the answer is yes to that. So the sales tax proposal is part of the overall budget for the governor. And if you look at the governor's budget in 28, 29, which really are the important years, there's $1.9 billion in cuts, which is $8 in cuts to every $1 of revenue raised in this tax proposal. $8 to 1, and ultimately solves half of the structural deficit into the long term at $1.76 billion of the $3.5. Also, to take this into consideration is that the governor is also making some other key investments. So including the research and development credit that's in this bill. There's also an expansion of the sustainable aviation fuel credit. There's fraud prevention in the bill. There's an area for bonus retention for service members and so forth. So in taking all of that into consideration, there are some revenue increases in the overall budget, including here. So the tax rate cut, Senator Miller, is $95 million cut. Annually, the increase to the expanded services is about $203 million a year. So the net being is what you're seeing on the total, about maybe a little more than $100 million of increased revenue each year.
Okay.
Senator Miller.
And Madam Chair, Commissioner, I don't need an answer to this today, but something that I would be really curious to know next time you're here is if we put a sales tax on everything, no exemptions, how much could we lower the sales tax rate and still bring in the same amount of revenue? I'd be really curious to know what that number would be.
Commissioner Revenue,
So,
Commissioner Revenue, yes.
Madam Chair
Commissioner
and
Marquardt.
Senator Miller, that's really, if you look at the tax expenditure report that just came out on page 150, are just selected services. They list them all. And business to business, these are selected, not all of them, but business to business is about $4.8 billion. And the consumer one is about $650 million. So most of them are business. But that still is not including clothing, motor, heating fuels and all, medicine and all those other things. We can get back to you, but it would be pretty significant. I mean, I think sales tax is a huge area where you're just not taxing a lot. But kind of one thing with the governor's proposal here is, and everyone on the tax committee knows this, we're trying to really try to right-size this to a more service-orientated economy, where back in 1967, when the sales tax came in at 3%, you had probably about 60% of goods in the economy, 40% services, and we know that has really kind of flipped. So, I mean, we know this is good policy, but we'll get back to you on what would be a revenue-neutral rate if we were to try to include everything. It would be much lower than the 6.875% we have right now.
I would also point out, Commissioner and Senator Miller, that the notion of broad-based taxes and low rates is a widely accepted tax policy in property tax, in sales tax, in corporate tax, and in individual income tax. And we are constantly being challenged to prove that that is so. It's not, we seldom get bills that, with regard to sales tax, that do anything other than exempt another good.
Exactly.
That's, exempt another good. And so the sales tax base, it's very attractive because it's very stable. It's very stable, just like property tax, and it's very regressive. So that's always, it really truly is always a challenge of how you get to that balance. And it is, we haven't been particularly successful in that, because what we do is exempt things, and make it more regressive. Okay.
Real quick, Madam Chair, I would love to have the conversation, not saying that the state's ready for it, although I might be ready for it, but a fair tax conversation in this committee would be a really, really good discussion, I think, at some point in the not too distant future.
Well, thank you for teeing that up. In 1984, there is a very important and comprehensive, there was a very comprehensive report from the Tax Study Commission, commonly referred to as the Latimer Commission. And I have started reading that. I will confess I'm only at page 2 of the executive summary, but what it sets out, Senator Miller, is what makes a good tax system. And I think that's the kind of discussion that you're asking for, and we're going to have it. Okay, Senator Drazkowski, do I amuse you?
Thank you, Madam Chair. I have offered the fair tax bill in the past. That'd be a great discussion, Senator Miller. I think either Senator Miller or I, or maybe many of us, would like to bring that bill forward, Madam Chair. If you and Mr. Chair would hear the bill, that would be a great discussion. By the way,
Which bill?
By the way, it was reaffirmed to me that a fee is a tax. That's what I heard in the discussion earlier. So thank you for clarifying that once again.
Senator Drazkowski, that just because we resolved that impasse with a fiction, if you will, we should still congratulate, in my mind, Governor Pawlenty and the negotiators at the time for reaching a resolution and ending a government shutdown. But, sometimes you need to do something like that, I guess.
Thank you, Madam Chair. Madam Chair, I was just referring to the reference we have in statute that says a fee is a tax. And we do have that in statute, and I do believe that's true. Both of them are theft from the people who earn them. Madam Chair, before I ask Commissioner the questions I have, will we be hearing the Commissioner's bill, and will we have a granular approach to the impact that it has on people's lives in the form of a spreadsheet?
The answer is, is yes, of course. And that's why I noted, we don't have language yet, but I thought it was important to have this presentation from the Commissioner, particularly because of the the proposal regarding sales tax. It's a very important one. So yes, indeed, we'll have a very detailed revenue estimate with regard to this part of the governor's proposal. And I hope that we'll spend the time to understand it thoroughly.
Thank you, Madam Chair. So thanks, Commissioner Markwart. So I'm still trying to understand the numbers. And when this came out, the governor was saying, oh, this is a tax cut and Democrats are going to cut taxes, which I haven't seen that happen since I've been here in 17 years. So I don't know. I was flabbergasted. Is Governor Walz actually listening to the people of Minnesota was my first question. And the answer appears to be no. But my question to you is a specific. So I'm looking at some numbers staff has given me for the amount of the tax increase for spreading this tax over these additional services. And it comes out to, at least what I'm reading, is $205 million increase in the first biennium, and then another $261 million in the second biennium. And you had given us the net figures. The net was 185 net in the first biennium and 236 or so in the second biennium is what I think I have. Yeah, that's what I have read on your handout here. So the back of the napkin tells me that means the cut to the rate equals 20 million the first biennium and 25 the second. Is that right?
No. So,
Commissioner Markwart.
Madam Chair and Senator Drazkowski, so the tax rate cut of the 0.075% is a revenue estimate of a cut of 95 million. So here's the kind of, I think you're taking a biennium versus 1 year on this potentially. So, and you're correct, the overall revenue estimate on expanding the services is about $203 to $205 million a year. So, you take the 203 million minus the 95, and it's roughly about 110 million a year. So that, in the first biennium, the 185 is like 90-some million a year, and the second, 235 is like 118. So the rate cut is 95 million. And Governor Walz is correct, because many residents will see a tax cut under the sales tax rate cut. So the average family will see a sales tax rate cut, nothing else, of about $37. It's about 1.1%. And so if you spend $550 or less dollars on any of these, well, first of all, if you spend nothing on these expanded services, you have the $37 cut. If you spend $550 or less on any of these expanded services, you will see a tax cut. So many residents in this state will see a tax cut.
So Madam Chair.
Senator Drazkowski.
Thank you, Madam Chair. Thank you, Commissioner. So it looks like a 2-for-1. It looks like for every dollar in tax cuts from the rate, the proposal increases taxes by $2. Is that right, Commissioner?
So,
Commissioner
Madam
Markwart.
Chair and Senator Drazkowski, well, it's not related that way. The tax rate cut is 95 million. The expansion is 203. But remember, not only are folks going to get this tax cut if they don't use a large amount of these other services, but as I had mentioned to Senator Miller's answer, is that this is part of the overall budget. And there, in 28-29, there are $8 of budget cuts to any revenue increases in this bill. And it's used also not only to solve the budget structural deficit, but it's also used to provide some important investments. So people also, out of these investments, are going to see benefits out of an R&D credit. An R&D credit, as we know, not only benefits business, but benefits society overall when these new inventions help people's quality of life. So it's just tough to just give a 1 to 2 or whatever that might be. So it's Folks are gonna, a lot of folks are gonna see a cut under this.
Well,
There's
Madam
no
Chair
doubt.
and Commissioner.
Senator Drazkowski.
Thank you, Madam Chair. Well, Commissioner, nice try, trying to help the governor spin what he's got here. What he has is $2 in tax increases and then $1 in a tax decrease in Minnesota sales taxpayers, which are going to be paying, they're going to be paying both sides of this. So we're going to have government, according to Governor Walz, take $2 out of their front pocket, put $1 in their back pocket, and tell them they got a tax cut and they got a really good deal, and government's going to help you. That's what I just heard. And that's not what Minnesota is saying, especially after the Democrats pummeled them with a $19 billion spending of overcollected tax revenue that they had contributed through their economic endeavors over the last 2 years before that, an additional $10 billion in tax increases on top of that the last biennium. And now we have Tim Walz coming forward and saying to Minnesotans, we're going to take $2 out of your front pocket and we're going to put $1 in your back pocket and you're going to be better off for it. That's what he's trying to say to us. No matter how hard you spin it, the reality is government's going to grow and we're going to increase taxes under Governor Walz's proposal. This is not the direction the Minnesotans asking, and I just wonder if the governor is tone deaf or if he's still on the campaign trail. Thank you, Madam Chair.
Thank you, Senator Drazkowski. I think the governor is intent on making the biggest investment in fighting climate change through the SAF credit and in innovation in Minnesota businesses with the R&D credit, which is part of this proposal. So we will consider your view of the governor's proposal, which you articulate extremely well, and we're going to also consider how we're going to make a transformational change in how we address fighting climate change with promoting in Minnesota in particular. In fact, I would no, I shouldn't make those kind of promises, but I can't tell you how significant the contributions that Minnesota is going to make with regard to aviation fuel. And I don't think we can emphasize that. We can't emphasize that enough. But we will continue this conversation. We're going to hear from Senator Nelson and then Senator Putnam. Senator Nelson.
Oh, thank you, Madam Chair.
And you needn't repeat Senator Drazkowski's comments, if you please.
Did you ask me to repeat Senator Drazkowski's comments?
I wouldn't dream of doing that.
No, I don't think I could do that either, Madam Chair. Okay, Madam Chair. Commissioner, I do have some of those same concerns that we just heard, but I want to drill down a little bit deeper on those. It's always interesting when we get a package and it's, oh, these are tax reductions, which of course Minnesotans look to because we're one of our higher tax states in the nation on many tax indices, as we know. But the challenge is then it's packaged with these tax increases. And that's what we're looking at today. And I too would be interested in, well, what if we just reduced that rate as opposed to adding on these new services? It seems to me like they should be its own issue. If we're going to talk about taxing services because it's the new way of where more services are purchased than products are purchased. I understand our society changes, and so I can maybe accept looking at that. But the challenge is keeping the amount of money that we are taking out of Minnesotans' pockets that are trying to raise their children, trying to grow their business, maybe trying to buy that first home as we're heading towards Easter, trying to buy those eggs that are now, I think if you're looking at maybe $8 by the time Easter gets here. So I'm just saying, there's a lot of challenges on Minnesotans' pocketbooks. And it would make so much more sense if during this time, we looked at a way to, if you want to say, right-size the sales tax, but not kind of this, I don't mean to be derogatory, but it's a little bit of a smoke and mirrors to say there's a tax cut, when in reality, the government is taking more money out of Minnesotans' pockets. So it's just hard to wrap your mind around that. And so it would be good to know, what would the sales tax rate be if we did not, or if we did expand to those services that you have listed here? What could that tax rate be reduced to and be revenue neutral? I'm not even saying a tax cut. I'm just saying being revenue neutral when it comes to the sales and use tax. And then after that, I have one other follow-up question, Madam Chair.
Commissioner,
Thank you, Madam Chair and Senator Nelson. So the last question you asked on what would be the rate, we can get back to you on that. I don't have those numbers right now if it was to be revenue neutral. But a couple points to Senator Drazkowski and to yours. This tax proposal that you're seeing is part of an overall budget proposal. You can't just take these tax provisions, they're not in a vacuum. The governor is taking great leadership. He is the first governor in the 25 years I've been here that has really taken a serious approach to what we know are the fast, long-term drivers of our budget, which is special ed and Medicaid waivers. And I mean, you go back to studies, within our means back in 1995 or other ones that were done by the demographer, they've been warning us for 30 years that we're going to face some big budget challenges because of baby boomers and the demographics. I mean, for some reason, every 12 months we get a year older. So they know exactly how things are going to happen. And back with the Budget Trends Committee back in 2009, they said Health and Human Services was going to grow at 8.5% a year, and revenue is going to grow at 3.9%. Unsustainable. Governor Walz, Lieutenant Governor Flanagan are the first ones in 25 years to seriously address this concern. Because if we don't curb the growth in those areas, it is going to squeeze out all the other investments, all the other things that add to the quality of life of this state. So this is part of the revenue raised in this part of the bill is part of the overall, which cuts $1.76 billion on the structural deficit into the next biennium. That is huge. The governor is looking at solving half of that into the future. And those are the big numbers where revenue and expenditures meet. So number one, it's part of the overall mix on this that has to be taken into consideration. And I do want to go back to some of the things mentioned from last year. So I think of the tax increases, probably a little over $2 billion were in the general fund. The rest of them are kind of counted on sales taxes and other types of things. And that was in the tax bill. But let's not forget the tax bill back in 23-24 provided for the largest child tax credit in the nation, which is about $800 million in the 28-29 biennium. Also to that is now 80% of all of our Social Security recipients pay no taxes on their benefits. That is a cost of $577 million into the next biennium. Those lower costs for families, those lower costs for senior citizens. And so we have to take, this doesn't operate in a vacuum. It's related to other years, it's related to the overall budget. But the fact of the matter is that, and put yourself into this boat. If you're an average family, you're gonna see a cut of about $37, 1.1%. And if you have spent less than $550 on these expanded services, you're going to get a tax cut. So every person's going to be a little different, But this is certainly a tax cut for many residents in the state of Minnesota. But the revenue increases are there to help balance this budget, because if we don't do it now or into the future, all these other things that lead to our quality of life are going to be greatly diminished.
Senator Nelson, follow up, and then Senator Putnam.
Yep, so just to follow up,
And
then
we're
my
going to,
final question.
excuse me, just for a minute, we do have people, members who have bills before us. We're, at some point, we're really going to come back to this discussion and not just on the language of the governor's bill. So you'll have more than one opportunity, Senator Nelson and others. But if you have a short follow-up question,
I
I'll
do.
call on Senator Putnam, and then we're going to move on.
Thank you, Madam Chair.
And then I'm going to call on Senator Weber, and then we'll move on.
Thank you, Madam Chair. Thank you. So we'll continue this discussion later, as our chair has suggested, regarding are these really tax cuts or income redistribution or all of those things we'll talk about later. But you did mention that including, I want to know something I'm hearing from counties across the state, particularly the counties that I represent, the concern about, we are going to be reducing costs so much, we'll be saving dollars. But how much of that is in shifting which are now state expenses onto our counties? So have you done an analysis of this is the governor's proposal in general here, how much of what is considered cost reductions or savings, or however you want to call it, how much is actually going to be shifting those responsibilities onto counties? I can think of one two off the top of my head that they're still struggling with. One has to do with the inoperable computers regarding benefits that our counties need to put out. And of course, I think it's still a DOS system. So I know the last I knew, Olmsted County had to pay $8 million, taxpayer dollars, just to be able to implement what the state is now requiring that the state software cannot do. And then also has to do with our prison system, or our jails, and keeping prisoners longer in our local jails, pushing the costs onto local taxpayers, and yet calling it a savings to the state. So can you identify how much that is that we're being pushed down onto the counties?
Commissioner Marquardt.
Madam Chair and Senator Nelson, so I am not an expert on all the other areas of the bill, but I do know there's some areas where the governor, lieutenant governor are asking the county to pick up more of the cost. I will remind members that since Governor Walz, Lieutenant Governor Flanagan took office, there's been $110 million of increases to local government aid and $110 million of increase to county program aid. And there's no cuts in these areas. So, I mean, I don't know what that amount, I know there is some, but the cities and counties have also received additional funding in the last 5 years, including $80 million of increased LGA, $80 million of increased county program aid just in 2023.
Final comment.
I'm going to
Madam
move
Chair.
on.
Oh,
Senator
save it.
Putnam.
Thank you, Madam Chair. Just very briefly, and thank you, Commissioner Marquardt. I do want to take a moment to appreciate our kind of bipartisan moment of comedy a few moments ago when we all acknowledged an interest and a desire to have a deep conversation about what fair taxation would be. Of course, that occurred before the great drazzing, or before we were drazzed. I've made you a verb, my friend. I'm pretty excited about that. Before the drazzing. I would ask you to think, I think that any rational person talking about tax policy would calculate in who's paying a tax in a consideration of its fairness. Not just merely the numbers or the size of those numbers, but who's actually paying the tax itself is an important variable in a rational conversation about taxation. So, Commissioner Marquardt, is it fair to say that your understanding of either the sales tax provision or other provisions has a disproportionately positive effect on working Minnesotans? Can you characterize the governor's budget in terms of its disarticulation of populations who will be paying the tax and who will be benefiting from it? And is it fair to say that some of these provisions are in the benefit of working Minnesotans?
Commissioner Marquardt.
Madam Chair and Senator Putnam, that's a great question. And it is somewhat tough to analyze right to the specifics because of getting people's spending patterns and so forth. But there is strong evidence through research studies and literature that when you expand the sales tax to services, you lessen the regressivity of the sales tax, which means, it's becoming more progressive. Of course, sales tax is regressive, so it doesn't make it progressive, but less regressive. And so, yes, because of that, benefiting working class in moving to a proposal like this, I think that would be fair to say.
Senator Weber.
Thank you, Madam Chair. To follow up on what Senator Nelson's comments were, Madam Chair and Commissioner, I really am opposed to the governor referring to this budget as a cut. Yes, there are some things that are cut, but what truly concerns me is the shift of taxing burden that is going on here. We have seen a tremendous increase in our real estate taxes all across this state, in every city, every county, and for decades, the state of Minnesota has used our local units of government to carry out their plans of increased spending, but avoiding paying for it because we force it onto them. And then we come back and we raise LGA and CPA or redo the formula, and we pat ourselves in the back and say what wonderful things we've done for local government, while at the same time we pass a budget that throws more costs onto them. And so I understand this is the early stages of the process and you don't have all the numbers available. But when this comes before us as a bill, I want you to be able to answer the question, how much shifting is going to occur to our counties for the increased burden we are placing on them to carry out state responsibilities? Because at the end of the day, I am starting to get numbers from counties that say only, even in terms of out-of-home placements, that alone will raise their levy 9% because of the shift that's going to occur from the state of Minnesota. And if the governor was looking to propose a bipartisan tax budget here, this is not the way to do it. And because there is no way, from the preliminary information I know of, that this budget is nothing but a tax increase and a tax shift. And it's, quite frankly, disappointing. Yes, there are going to have to be some hard decisions made to deal with the deficit. There always is. Quite frankly, these decisions should have been made over the last couple of years with a budget that was increased by 40%, but that's water over the dam at this point. And so that is my feeling about this, and I make this statement at this point because I don't see anything in your presentation that deals with the shifting amounts, and because I have a bill up in another committee soon. So, with that, if you may comment to that, Commissioner, if you wish, but I just want you to know that we do expect some answers to these shifting questions when this bill finally is in final form and comes before us.
Commissioner.
Madam Chair, and Senator Weber, I appreciate those comments a lot. And like I said, I don't know all the budget, but I do think there are, this budget is asking the counties to take on a little more, but you can't forget again what happened in 23. There's been, Minnesota does a pretty good job of intergovernmental aid to our cities and counties, probably better than most states. And again, $80 million went out to cities and counties just in the last year, each additional year. But besides that, there was also, I can't remember the exact number that went out in increasing the homestead credit state refund and the renter's credit to help buy down property taxes. So, and the last thing I will mention is that $1.3 billion of the governor's, lieutenant governor's budget cuts come from Health and Human Services, not from counties, not from anywhere else. that is a large part. And so this is not a budget of shifts and other things. This is really taking a look at these hard, fast budget drivers that if we don't get a real grasp on, we're going to be in real trouble as a state in the future. And with the governor's leadership, he's realizing that.
Thank you, Senator Weber. Thank you, Commissioner. I wonder, if you would just move on now very briefly, but we'll come back to this, and I hope that members will keep this summary of the proposals as it affects the tax committee's decisions in their folders, because I think we need to understand what services, for example, are being taxed right now, and how in some way they are the ones that the governor is proposing to tax are somehow more worthy of a tax exemption than we currently have. And just moving on your behalf, if you don't mind, to keep in mind what the expanding the research and development credit are, and the arguments that are made on behalf of that. And then Senator Putnam's favorite, if you'll look on page 9, I think you could present this on behalf of the governor as well as many legislators. And this is attachments and appurtenances. So Senator Putnam has a bill. You want to explain that now in support of the governor's provisions? What are you proposing? I'm asking you a question. You have the bill that supports the
I'm
governor's
sorry, Madam Chair,
position?
my enthusiasm was overwhelming, and I wasn't paying careful attention because I was just too excited to
Can't
hear the
hear
word
you.
appurtenance. I'm sorry, Madam Chair, I was distracted by my enthusiasm for hearing the word appurtenance again.
Oh, I see.
And I missed the totality of your question. If you could.
I was just, on page 9 is the governor's position on appurtenances and attachments, and I was just saying you have a bill on that, and as I understand it, it endorses the governor's position, and I was just wondering if you would make a brief comment about it.
Thank you, Madam Chair, for another opportunity to talk about appurtenances. Yes, I'm glad that the governor shares my interest in the word and his commitment to solving the problem, which is to replace the words attachment and appurtenances with systems so that the totality of the power delivering system is exempted as it should be. So if you could pass on to the governor my appreciation for his enthusiasm on this issue.
Thank you, and then finally, we had, if you look now to page 10 and 11, Commissioner, we had, the last few pages here, we had a big challenge last year about how we were going to resolve the issues with the Alliance court case. And the governor has a proposal, if you would just explain that briefly on pages 10 and 11 on the direction that he is urging us to take.
Yeah, so, thank you, Madam Chair and members of the committee. On page 11 is the property exemption for low-income housing tenants. That was the Alliance bill. And the bottom line here is if we don't do something, those renters that are in now these tax exempt buildings and so forth, they would actually get charged with it's a personal property tax, but be at the market value of that. And so the idea is like if a Caribou Coffee is on the University of Minnesota campus, which is not taxable, they're going to be taxed at whatever the value of their building. So it's the same principle. So all the governor does here is just says they're not going to be taxed at any rate. They will not be susceptible to any personal property tax. Now, we know there's more issues involved with all of this, But this is, initially, we have to take care of the tenants there to make sure that they're not hit with a personal property tax, which would be the same amount like a regular market value tax.
Then Commissioner, if you would just briefly explain the last pages, the new audit unit that you're proposing and the short line railroad infrastructure modernization, if you will,
Sure, Madam
and the
Chair.
12K education credit assignment. Just to
So,
get
very good.
everything,
Madam
just to get
Chair,
everything
yeah,
on the
well,
record here.
On page 13 then is the new corporate franchise tax division pass-through audit. These pass-through businesses, especially like partnerships, are becoming more and more complex all the time, and they're increasing in number. And a partnership can be owned by a partnership, owned by another partnership, and they all have a set of owners, and to try to trace through the funding is pretty intense. So increasing auditors for that, to be able to audit that. And ultimately, over time, it'd be about a 4-to-1 revenue brought in versus every dollar of expenditure. That's not the reason we're doing it, because you can see it's a low amount there. But it's just to try to kind of match the time of the more complex pass-through entity organizations. The next one is repealing that K through 12 education credit assignment. I think we've maybe talked about that a little bit before, but right now, a taxpayer can assign their credit or refund to a lender who then pays the educational. We're taking that step out, so it doesn't impact any of the other portions of the K through 12 education credit. Then the short line railroad, what the governor's recommending here is, right now, railroad can transfer a credit up to 50% to help modernize and build up. This would now allow the credit to be immediately transferred rather than having to wait till the tax year closes. So it's just a
Yeah.
change in timing there on the transfer.
Thank you, Commissioner, and Senator Weber, I hope especially to rely on your analysis of the governor's short line credit, because we have been trying to help the short lines in southwestern Minnesota, and I, for one, am going to be very interested to see if there's a way of marrying these two proposals that make sense to the tax committee. So with that, we'll come back to these other things, and some of them are indeed reductions in repealing, for one thing, the tax filing modernization account, and then reducing the sustainable forest incentive account, and repealing the local government cannabis aid, and also reducing the AIS invasive species aid. And we will take a much more detailed look at that at some other time. But Commissioner Marquardt, we really appreciate your coming here this morning and joining us in this conversation. And it's only the first one. So thank you very much.
Madam Chair and members, I appreciate that very much. And do take a look at page number 6 on this, because it does talk about other services that are currently taxed, which I know is a big question asked. So appreciate the discussion very much. Thank you, Madam Chair and members.
Thank you very much. The next item on our agenda is Senate File 249, Senator Johnson Stewart. Senator Johnson Stewart, there is, on the agenda, there's a typo with your name. We apologize.
That's all right. Thank you, Madam Chair. Good morning, everybody. I'm having my two testifiers sit to my right. As you'll see, they both use a sign interpreter, and I'm thrilled to be here this morning to present Senate File 249 to the Tax Committee.
Senator Johnson Stewart, our practice here is to go through section by section, asking you to explain your bill. Not just a summary, but section by section.
Yes, thank you. I've been well prepared, Madam Chair. So do you want me to start?
Yes, please.
Okay, great. Just so everybody's comfortable, my two testifiers are sitting next to me, and I'd love to introduce them first. First, we have Stevie Middlebrook, who is a teacher at the Metro Deaf School, and then Alicia Lane, who is Government Relations Director at Minnesota Commission on the Deaf. And of course, their interpreter is here as well. So Senate File 249 is a bill relating to a tax credit for special education master's degree. Current Minnesota law provides up to $2,500 non-refundable income tax credit to current teachers with a license from the Minnesota Department of Education who complete a master's degree in a core content area that is directly related to their teacher's licensure field. The master's degree program is not allowed or does not include pedagogy or a pedagogy component, and it must be claimed within the year in which the degree is completed. I'm guessing that perhaps Senator Putnam knows what pedagogy means, but for the rest of us, pedagogy is the study of how to teach. This bill in Section 1 expands the eligibility for current credit to include taxpayers earning a master's degree in special education. It also removes the current restrictions on pedagogy components from those earning their master's degree in special education. And just as a side comment, as somebody very familiar with special ed and the teaching process, my daughter's a special ed teacher, the pedagogy of special ed is especially important. And so if you're wondering why that provision is here, that's part of it. Line 1.21, if you'd note, of the bill changes the current requirements that eligible teachers must hold a teaching license issued by their licensing board in Minnesota, both when they begin the master's program and when they complete it in order to be eligible for the credit. This new language says that the eligible taxpayers only must obtain the license within 6 months of completing their master's degree program in order to claim the credit. And then on line 2.6, you'll see a summary of what special education means. To qualify for this credit, the degree must include or lead to licensure in one of the following areas: developmental disabilities, early childhood special ed, deaf and hard of hearing education, blind and visually impaired education, emotional or behavior disorders, autism spectrum disorders, and learning disabilities. Then jumping down to lines 2.18 and 2.19, there's new language that states the credit can be claimed in either the year the degree is obtained or the year the teaching license is obtained, in order to account for the change that allows eligible candidates to receive their license within 6 months of completing a program. And the effective date begins tax year 2025. Madam Chair?
Thank you, Senator Johnson. Stewart, I'm going to see if there are questions first before we turn to your testifiers.
Thank you.
And I have one that maybe you know the answer to, or if not, Senate Council can tell us. Is special education, which you referred to, page 2, lines 6 through 9, is that definition just for the purposes of this bill, or is this a definition of special education where we would find a similar language in other parts of the statutes? Ms. Paul.
Madam Chair, members, the definition of special education here would only be for the purposes of this credit. I'm not sure if it's defined elsewhere in our statutes in the education chapters, for example, but if we have a specific definition here in our tax chapters, that would be the definition that applies for tax purposes.
And Senator Johnson Stewart, I just draw attention to that, of maybe looking at the definitions of special education that are used in other statutes that make sure they're not at cross purposes with with one another. You might ask the attorneys that serve the Education Committee, just double check with them, or maybe work with Ms. Pollock to that end as well. And then, are there any other questions before I turn to the Senator Drazkowski?
Thank you, Madam Chair. I'm curious, is this a non-refundable or refundable credit?
Beg pardon?
I did get the answer. Ms. Pollock said it's a non-refundable credit. That was my question, Madam
Okay.
Chair. Thank you.
Anyone else? Then we'll turn to your testifiers.
Excellent, thank you, Madam Chair. Our first testifier is Stevie Middlebrook. Again, Stevie is a teacher at the Metro Deaf School. Stevie?
Good morning, Chair Rest.
Welcome
My
to the
name
committee.
is-
If you would identify yourself for the purposes of our recording.
Certainly. My name is Stevie Middlebrook, and I'm a second grade teacher at Metro Deaf School. I was a paraprofessional at Metro Deaf School for 10 years before I graduated from Metro State University with my BA in education. I'm currently pursuing a master's degree in deaf and hard of hearing education at the University of Minnesota. Last year, I submitted a written testimony for this bill. At the time, I had not yet begun graduate school and was unsure how I would afford it as a single mother. Since then, I've been fortunate to find funding through vocational rehabilitation services and a grant from the University of Minnesota. I still felt it was important to come testify for this bill because these funding options are not available to everybody. Vocational rehab is only available for deaf and hard of hearing people. There are many other hearing people who want to teach deaf and hard of hearing children too, but they do not have the funding options. Minnesota has only one teacher preparation program for deaf, hard of hearing education licensure. Other special education licensing fields, such as blind and visually impaired education, have none. My colleagues deserve the opportunity to attend a program that is the right fit for them. Funding options like mine are often restricted to in-state options. So this limits out-of-state options, forcing people to attend colleges that are not the best fit for them. Thank you for your consideration and support of Senate File 0249 to ensure that deaf and hard of hearing students will have equal and quality education.
Thank you for your testimony. Are there any questions for Ms. Middlebrook? Seeing none, we turn to Ms. Lane. If you'd identify yourself for the record.
Yes, thank you, Chair Rest. I'm Alicia Lane, and I am the Government Relations Director for the Minnesota Commission of the Deaf, Blind, and Hard of Hearing. I am here today to ask for your support of Senate File 249. This is a bill that we have been supportive of for several years, and the reason for that is because there is a severe shortage of deaf and hard of hearing teachers. And really, it's specifically impacting that deaf and hard of hearing field. The state has a deaf and hard of hearing advisory group that has over and over again pointed out the severe shortage that we are experiencing, and they've said that we need to do something about it. I know of at least one K-12 school that has a waiting list because of this severe shortage. And that same school has a plethora of paraprofessionals who are interested in becoming teachers, but because of the financial cost barrier, aren't able to. As you just heard from Stevie, she was one of them. She was a para for 10 years before she figured out financial options and ways to pursue her master's degree. Now you're in your 12th year. This is not a new tax credit, as you've heard. There's already a system in place for other licensure fields, and we are just asking that you expand this to include special education licensure. This is a great opportunity to have bipartisan support and address the special education shortage and lower taxes for that group. We are grateful to Senator Johnson Stewart for carrying this bill, as well as the other legislators who have co-signed. I just want to thank you for your consideration and invite you in joining us to support this Senate File 249. Thank you all.
Thank you very much for your testimony. Are there questions for the witness? Senator Johnson Stewart, this bill has been before us before and has been included in the Senate tax bill in the past. I don't know how quickly Ms. Pollock can go back to the previous version and let me know or let us know what the revenue estimate showed in previous years. Can you find that quickly enough?
Madam Chair, I would defer to Mr. Mumm on that question.
Oh, of course.
Madam Chair, yes, I can find that within a few minutes.
It would be instructive to know what the quote cost was in previous years. And I would also point out, Senator Johnson Stewart, that not only is this a non-refundable credit, but is also scalable. The credit that's in the bill is at $2,500. It unlikely to be included at more than that amount, but it may be included at less than that amount when we come to put the bill together. Do you have any further comments to make about your bill, Senator Johnson Stewart?
Thank you, Madam Chair. Thank you for your time. The outcome of this bill is hopefully to fill some of the hundreds of special ed positions open in our Minnesota schools. I thank you for support, and if anybody's interested, the way you say thank you in sign language is thank you. Thank you for your time.
Thank you so much, Senator Johnson Stewart and our testifiers.
Yeah, thank you to our testifiers. They both have to get back to school, so I appreciate the time.
Okay, next we have Senator Klein. What? Senate File 249 will be laid over for consideration in the omnibus bill. Senator Klein brings us Senate File 297. Senator Klein.
Madam Chair and Committee, thank you for hearing.
Take us through the bill section by section, please.
Prepared to do that. Madam Chair and Committee, thank you for hearing Senate File 297 again this year. You heard it last year as well. And thank you to my co-authors, Senator Weber, Miller, Putnam, and Dibble. Members, this bill came forward from the landscaping industry itself to simplify their tax exemptions, their sales tax exemptions. Section 1 of the bill addresses accessories and detachable units on equipment used in landscaping, such as chainsaw chains and lawnmower blades. Currently, those are tax exempt, sales tax exempt, if they are sort of used for an approved landscaping purpose, but not sales tax exempt if they are used for other purposes. There's been a good deal of confusion in the industry, you know, when it should apply and when it shouldn't. The language proposed within the bill simply makes all of those not sales tax exempt, so it would improve revenues to the state in sales tax. The second part of the bill deals with land clearing. Most landscaping services are taxable, but land clearing services for tree, brush, and shrub and stump removal are tax exempt. Again, there's been confusion on the part of the industry in interpreting this, whether it applies only to sort of a first development of a property or it applies to renovations of a property. I always come back to the state office building that's being renovated across the street. There was a park there. We've redone the park and it's now going to be a building. Does that count as land clearing or does it not? And I don't think the industry knew, and I'm not positive the state of Minnesota knew either. So the solution proposed within the language in Section 2 would simply make all land clearing activity tax exempt. Madam Chair, there is a revenue estimate contained within your packets, which members can peruse, and I have 2 witnesses.
Thank you, Senator Klein. Everybody has the revenue estimate. By making this changes, it's obviously a very modest change over time, but we certainly will be considering it. And we'll now, with your permission, Senator Klein, turn to your witnesses. And who's going to go first?
I can go first. Good morning, Madam Chair and members of the committee. My name is Greg Crockstead, and I am the Chief Executive Officer of Rainbow Tree Care. We are a Minnesota-based, employee-owned company that employs a little over 300 Minnesotans. We are also a member of the Minnesota Nursery and Landscape Association. I do want to thank Senator Klein for bringing this bill to your attention today, and really thank you for the opportunity to testify on this bill today. Senate File 297, in our industry, this is a good bill. It brings clarity for us and the Minnesotans on the sales tax and use tax related to the landscaping and landscape maintenance services. Our businesses, we perform both taxable and non-taxable service, and we use detachable equipment. This often happens on the very same business day. There is no way for us to determine or keep track of which chainsaw chain we used on a taxable service and which chainsaw chain we use on a non-taxable service. And we don't buy 2 of them. And we don't pay people to take them off and put them on, depending on what service they do. So one of these provisions makes it so that we pay the sales tax on every purchase of detachable equipment. It's better for us because we don't have to deal with 2 sets. We don't have to deal with trying to figure out how to keep the records and be audited and try to explain and be at risk. In fact, our company and many already pay the tax because we don't want to face implications of trying to figure this out on the other side. So we would rather pay the sales tax and continue to work and remove this confusion and unnecessary complexities. The second section in the other provision makes land clearing a non-taxable service. It's currently taxable at times and non-taxable, and it's confusing and there's no clearness to actually what applies here. Now, the bulk of the land clearing already falls in the non-taxable bucket, and this issue here resolves it in a way so that any circumstance where somebody's doing a remodeling project or maybe building a garage makes the land clearing services non-taxable. It's clear. It makes sense, and we don't have to try to keep records and justify what might or might not be land clearing with the intention of building something on the land where we're taking the vegetation out of. So I want to thank you very much for the opportunity to speak to you today, and certainly willing to answer any questions.
Sir, welcome to the committee. If you'd identify yourself for the record.
Scott Frampton. Sorry. Scott Frampton. Good morning, Madam Chair and committee members. Thank you for your work on the opportunity to testify on behalf of this bill. And thank you, Senator Klein, for bringing this bill to the committee's attention. My colleague, Mr. Krogstad, and Senator Klein have done a very good job, I think, of explaining the importance of this bill to our small business profession. So I won't go into those details any further, other than just to simply say that this is really a clarity issue. We're not asking for any relief. And if you were to read the section of the statute on taxable services for the nursery landscape profession, you would clearly understand the confusion. There are other details that are quite confusing, but this is the two items we're focusing on today. Many of our colleagues are small business owners, mom and pop shops, very small staffs. So keeping track of how to tax, if they're working on a property that they're doing two services, one's taxable, one is not taxable, how to charge that to the consumer, how to pay that to their vendors is very, very complex. And often they're either doing it incorrectly by overpaying the tax because it's simpler, or underpaying the tax, which is also simpler, which likely causes them grief when they ultimately have a sales tax audit. So simply this clarity is going to help our small business colleagues do a much better job and a simpler job, a lower cost administrative job in doing their work and allowing them to do the professional services that you all likely hire them to do. Thank you again for your time today. I appreciate it.
Are there questions for Senator Klein or his witnesses? Senator Nelson.
Thank you, Madam Chair. Well, my first comment is, this is a very confusing issue, for sure. But I would say that this might be Exhibit A as to why we should think very seriously about taxing services. Taxing services are very different than a sales tax on an item that you go buy. And I think you have explained very clearly why the idea of taxing services could pose much confusion. But my question has to do with, if I understand the bill correctly, it also provides a sales and use tax exemption for certain pieces of equipment and tools. And I see Senator Klein nodding his head, that's correct. So then my question would be, would not those items be a business deduction when it comes to paying the income taxes? So kind of explain to me, it seems to me it's already a business deduction, and it's just that the sales taxes are a business deduction as well. And so I don't quite understand the necessity for that part of the bill.
Senator Klein.
Thank you, Chair and Senator Nelson. And I'm going to lean on the expertise of Ms. Pollack, if possible, to explain the interaction between the sales tax exemption and business deductions for purchases.
Ms. Pollack.
Madam Chair, Senator Klein and Senator Nelson, the first part of the bill actually adds some items to the sales tax base to make them taxable. So these are the detachable parts of equipment such as the chainsaw chains or blades for a lawnmower that, as the witness explained, apparently some have difficulty determining when those are taxable and when they're not taxable, depending on what type of service is provided. And so, excuse me, my understanding is that these would remove the exemption for this type of equipment, thereby making them taxable. The tax exemption in Section 2 of the bill applies to the service of land clearing, as both witnesses spoke to before. And Madam Chair, sorry, Senator Nelson, yes, all of these expenses, regardless of whether they're taxable or tax exempt, would be allowable as a business deduction. The difference would just be, whether the sales tax was paid, it would be a, additional amount to the deduction.
Senator Nelson.
Thank you, Madam Chair. Thank you, Ms. Pollack. I think you answered my question. I guess I'm kind of back to my original thinking on this, that the most simple, straightforward way would be to stop taxing these services in total, the services, but continue, obviously, with the sales and use tax. But of course, there is that deduction on the back end if it's used for a business expense. So I would submit that as an option.
Senator Klein.
Thank you, Madam Chair, and thank you, Senator Nelson. And I think the bill language actually accomplishes your purpose. It does sort of make all land clearing services non-taxable while putting back the tax on detachable equipment.
Thank you. Any other questions or comments for Senator Klein or his witnesses? Seeing none, Senator Klein, Senate File 297 will be laid over for consideration in the omnibus tax.
Welcome to the committee, Senator Rest. We have Senate File 46 in front of us, and I believe you have an author's amendment.
Thank you, Mr. Chairman and members. Senate File 46 is very similar to, coincidentally, Senate File 2346 in a previous session, and it provides for an exclusion from gross income for certain non-resident employees. And in Section 1 of the bill, we have in Subdivision 2 the definitions of employee, employer, employment duties, all leading toward this, what we should be understanding in terms of Minnesota's tax policy of a non-resident, a qualifying non-resident individual. Other words that are, and terms that are defined are entertainer, which comes from 290.9201. If you're interested in what that says, I have that with me. And then exactly who is this qualifying non-resident individual? It is someone, looking at lines 1.18 and on, that who, quite frankly, lives somewhere else and goes at least once a month to that home in another state. Secondly, who is paid wages for those employment duties, and again, not including the entertainers, in Minnesota for 30 or fewer days in the taxable year. And how they are taxed now is on the total income that is expected to be earned in the state of Minnesota during that taxable year. That it is very cumbersome. It is it's hard to keep records on. It's hard to estimate that amount of money. But what's not hard to do is just count the number of days that you work in Minnesota. And there are, you have the chart in your handouts, in your folders of what states have a 30-day safe harbor for non-resident traveling employees. Minnesota does not, and those are all the yellow ones on the page. Montana, Illinois, Indiana, West Virginia, and to some extent Louisiana do. The gray states are ones without an income tax. But we are aiming to have Minnesota join those other six states in providing that safe harbor. So we've defined in the bill, what employment duties are, but again, at the bottom of page 1, does not include entertainers who earn money in Minnesota. It also means someone who performed employment duties in more than one state during the calendar year. And what is, I think, a nice touch in this legislation, that it's also a person whose state of residence provides a substantially similar exclusion or does not impose an individual income tax, or whose income is exempt from taxation in Minnesota for constitutional reasons, or the Internal Revenue Code. Also, how are they to keep track of that and be able to keep track of it? And so, so we define what a time and attendance system is, not again according to how much their estimated income is going to be from working in Minnesota, but how much time and how many days that they are here. So the time and attendance system is a way or a system that the employer keeps track of of every day that is worked in Minnesota, and then also there are a couple of ways of doing that, including, if there isn't one, a reliance on the employee's own records. So, having defined that qualifying non-resident starting in subdivision 3, line 2.12, wages that are paid to a qualifying non-resident are exempt from the withholding requirements. And in subdivision 3, paragraph B, if during that year the number of days an employee spends performing those duties, the withholding requirement are also affected. In subdivision 4, there's reference to, so what if things go awry? The commissioner shall not apply, and I'm going to have an author's amendment in just a minute here, but we're going to change a word in that line as well. Any kind of penalties or interest otherwise that would have been applicable. If the employer met either of the following conditions, and that is that the employer has that time and attendance system and relying either on the employer's records or the employee's determination of their time. There's a severability clause in subdivision 6 as well. And so that's what the bill does. And Mr. Chairman, at this time, I have one amendment changing 2 words. And the amendment would be on line 220 to delete shall and insert must. And on line 2.32, after the word by, to insert the word the, THE. Mr. Chairman, that's my author's amendment.
Senator Rest offers the author's amendment. Can Ms. Pollock report the amendment, please?
Mr. Chair and members, the author's oral amendment would be on 2.20, delete shall and insert must. And on 2.32, after by, insert the.
All in favor of the author's amendment, say aye. Aye. Opposed? The bill is in the form that you want it. Senator Rest, shall we go to your witnesses?
Thank you, Mr. Chairman. I would also now direct members' attentions to the revenue estimate. This bill has been before us before, and the result for this year for Senate File 46 is interesting to me because it's less than the amount in the previous year. We can ask ourselves, why did that happen? Because usually it doesn't happen. Usually more money. But in thinking of the pandemic, if you look on, oh, you don't have it, but the revenue estimate from March 21st, 2023 was based on non-resident individual income tax returns for tax year 2019. 2019, before the pandemic, or the major impacts of the pandemic. For this year's, now 2025, and 2025, it is now based on non-resident individuals' income tax for 2022, when we are maybe coming out of the pandemic, but nevertheless showing the results of much more work being done remotely. So the revenue estimate moving forward for 2026 is almost $1.5 million for each of the years in this biennium, whereas in the bill from 2023 was almost $5 million. So you have to ask, what's the difference? And I think, 2019, pre-pandemic, people going to work in order to work, and then in 2025, based on 2022 tax returns, people are also working by staying home, which would mean that they would not be subject to these provisions because they wouldn't be working in the state of Minnesota, or at least that's how I physically, not counting the days that they would be working for a company in Minnesota. So, Mr. Chairman, that's a bill, and I believe there are a couple of testifiers.
Thank you, Chair Rest. Can Gavin Hansen and Gino Fragnito please come forward? Mr. Hansen, welcome to the committee.
Gavin.
Please introduce yourself for the record and proceed.
Thanks, Sharon.
Good morning, Chair Klein and committee members and staff. My name is Gavin Hansen, and I am the Fiscal and Economic Policy Director for the Minnesota Business Partnership. MBP represents over 100 business leaders and executives who collectively employ nearly 500,000 Minnesotans across a wide range of industries, contributing significantly to America's headquarters economy. Thank you for the opportunity to testify in support of Senator Rest's bill, Senate File 46. This bill addresses an ongoing issue faced by out-of-state employees who travel to Minnesota for brief work-related purposes, such as a quick business trip or quarterly meeting, only to become subject to tax withholding requirements. Additionally, it places an undue burden on employers who risk penalties and create administrative challenges for the Department of Revenue. Senate File 46 provides a well-considered solution to this issue, offering clarity and simplicity. The bill establishes a 30-day threshold for work-related travel, ensuring that employees and employers avoid unexpected tax complications while making compliance more straightforward for the Department of Revenue. Importantly, the language in Senate File 46 has been carefully vetted over the course of nearly a decade. As Minnesota continues to serve as America's headquarters economy with many leading companies based here, it is essential to recognize the increasing mobility of today's workforce. Executives and employees often live and work across multiple states, making a practical and fair tax policy like that in Senate File 46 more important than ever. This legislation eliminates unnecessary administrative burdens, prevents gotcha moments for employees and employers, and is a common sense solution. I urge your support for Senate File 46. Thank you very much.
Thank you, Mr. Hanson. Mr. Fragnito, please introduce and proceed.
Thank you, Mr. Chair, members of the committee. I'm Gino Fragnito, and I'm the Government Relations Director at the Minnesota CPA Society. And I'm here today to support Senate File 46 to reduce the compliance burden on both employees who may work a few days in multiple states and employers who are required to withhold those income taxes for a few days worked in other states. The mobile workforce legislation has on a national level stalled, but the problems continue, so states are now looking at ways to solve the problem at the state level. The bill would reduce the compliance burden and increase efficiency of administration by creating that 30-day safe harbor for filing requirements in states with an income tax requirement. An individual outside of their home state for 30 days or less would not need to file multiple tax returns, thus reducing their cost for filing the taxes, and would also simplify the process in their home state. By excluding the compensation received by qualifying non-resident individuals from gross income, it also reduces the compliance and administrative burdens on the Department of Revenue and their process to administer the tax code. As Senator Rest mentioned, work preferences have changed significantly in the last 5 years with increased access to remote work and increased complexity with tax laws. Senate File 46 promotes workforce mobility while exempting non-residents who work in Minnesota for 30 or fewer days. And it's important to remember that this would only be allowed for those individuals whose home state also offer a similar provision. Reducing tax complexity for temporary workers could provide economic benefits by attracting more skilled workers for short-term projects in Minnesota. In closing, Mr. Chair, Senate File 46 acknowledges the increasing rate of remote work and short-term multi-state assignments while adapting Minnesota's tax system to align closer to these modern work patterns, making the state more attractive for businesses and workers in today's gig economy. Thank you, Mr. Chair.
Thank you, Mr. Fragnito. Our last testifier, Mr. Doug Lindholm, is online. Are you with us, Mr. Lindholm?
I am indeed. Can you hear me, Mr. Chair?
We can hear you. Please introduce yourself and proceed.
Thank you, Chairman Klein. My name is Douglas Lindholm. For 25 years, I was the president and executive director of the Council on State Taxation in Washington, D.C. I am now special counsel to that organization, working on special projects, of which this issue is one. While I was at COST is an organization that represents around 500 Fortune 1000 companies. We are the big guys. And on this issue, we tried to get, as Mr. Fragnito referenced, a bill through Congress that would help alleviate the difficulties of this area. We're unsuccessful, so now we're going state by state to try and get states to adopt it. And this issue in Senate File 46, and I'd like to thank Senator Rest for her efforts on this issue, both last year and this year. Very much appreciated. The issue is how to account for non-resident employees that are traveling to states for short periods of time for work. That is people coming into Minnesota for one day to do work, or for a conference where they're still getting paid. The issue flies under the radar for most people, and that's largely because there's widespread non-compliance. And I'll be the first to admit that I don't comply. I probably travel to 20 states or so during the year. I don't file income tax returns, but even though I'm legally required to. Now, there's the other side, the Department of Revenue, and I've heard from many of them will tell you, we don't want everybody to comply because we will then have to process thousands, if not tens of thousands of very small dollar returns. So in about half the states today, if you travel to work in those states for just one day, you as a non-resident employee are legally required to file a non-resident personal income tax return and pay on what you earn in the state. Then you get a credit on the amount you pay to your home state. Now, in addition, your employer is also legally required to withhold on your income so you can pay that tax. Now, in most cases, as I referenced, it's a wash because you get to take a credit against your home state income tax return for what you paid in other states. Now, this is this bill addresses this problem in three ways. First of all, it gives a 30-day threshold, and as Senator Rest referenced, days are much easier to count than dollars. The 30-day threshold would apply to both personal income tax liability of the employee and the withholding requirement for employers. And so what it does automatically, it limits the scope of the people that are caught in this net. And it simplifies their compliance burden, instantly brings them into compliance and does not, there's not, the aura of widespread noncompliance. So secondly, the 30 days allows people to realize that if they have the kind of job that's going to bring them into the state for more than 30 days, that's a very small slice of the traveling populace. And they'll be able to then work with their employer to say, I'll be in this state for 30 days to open a factory or open a hotel, so please start withholding from me as of day one. So they don't inadvertently trip the 30-day threshold and have to go back to withhold. The second thing this bill does is that once there's a uniform standard, we get all states to adopt this 30-day safe harbor. As I said, it will instantly bring most traveling employees into compliance. Most work travel is less than 30 days in a non-resident state. And it also allows the DOR to not worry about enforcing compliance for thousands of small dollar returns that are there for one day. The third aspect of this bill is the reciprocity provision. And the reciprocity provision says that Minnesota will only provide a 30-day threshold to those non-residents coming from states that also provide a similar protection to Minnesota employees that are traveling to that state for work as well. Now, the goal of that reciprocity provision obviously is to encourage more states to adopt the 30-day provision, so we get a nationwide standard, it becomes much more simple to comply with. And the other benefit of the Minnesota fisc. One comment about the fiscal note, very, very difficult to put a fiscal note on this issue because the department can only work with what they have. And what they have is only those people who are complying with and filing non-resident returns, mostly groups like accounting firms and law firms who have a time and attendance system and are required to do so. It's also hard to determine how many Minnesota residents will no longer be taking credit for their out-of-state filing as well, which would also impact the fiscal note. So very, very difficult to accurately assess the impact of this going down the road. But as I said, in the long run, it should be a wash other than minor dislocations between rate differentials among states. Now, this is not just a corporate bill. It protects any employer. That means unions, schools, government employees, emergency workers. Everybody is subject to this law that says if you come into the state as of one day, you should file a personal income tax return. Now, the language in the bill has been thoroughly vetted. This is the language that we used. We sought to get through Congress for 10 years. And most of it is there to avoid any sort of tax evasion by employees to make sure that there's no free lunch here. And I very much appreciate Senator Rest's sponsorship and urge you to support this legislation. And I'd be very happy to take any questions. Thank you.
Thank you, sir. Members, any questions for Chair Rest or the witnesses? Senator Barr.
Thank you, Mr. Chair. Senator Rest or Mr. Lindholm, well, either one. I just want to make sure I'm kind of getting all of this. The 30 days, is that 30 days a time, or is that 30 days accumulative in a calendar year? So if you went to your windmill installer or some kind of installation specialist and you came to Minnesota for a week in January and a week in March and a week in July and a couple more, and you ended up at 5 weeks for the year, and you were over the 30-day mark, would that trigger your 30-day threshold, or is it
Yes.
30 days? It does?
Mr. Chairman,
Chair
Senator
Rest.
Senator Klein, Senator Barr, yes.
Senator Barr.
Thank you, Mr. Chair and Senator Rest. So I can see where the non-compliance comes in, because I come from my outside work is traveling state to state to state, and I can see where, personally, I have never filed a non-resident return with any state. And then, so I can see where the non-compliance piece comes in here rather easily. And the last question I have is, for states that do not have income tax, the 9 that do not have any state income tax, is there an automatic reciprocity on that?
Senator Rest.
Mr. Chairman, yes.
Thank you, Mr. Chair. Senator.
Senator Drazkowski.
Thank you, Mr. Chair. Mr. Lindholm, could you characterize for us, you're in a kind of a unique position. We have this trend of more people working from home, and they have the ability, as you and the senator have discussed, and that trend is increasing. And so people will vote with their feet. We're seeing that from businesses. We're seeing that in state government agencies. We don't know how many of our state government employees now work in other states, and it's increasing. And obviously it's increasing here from Minnesota, because we have a very oppressive income tax system because of the huge scope of our government that we have to pay for. So do you have reports, Mr. Lindholm, that you put together that characterize how people vote with their feet, or not vote, but I guess work with their feet in states where they can feel more freedom?
Mr. Lindholm.
Yeah, thank you, Senator Drazkowski. We have not done any of those reports. I think the Tax Foundation has done some reports, but obviously there are a lot of factors that go into that. Taxes certainly are one. As far as the question of remote work and work from home versus work in an office, I'd like to differentiate that from what we're trying to do here, and that is for just those people that travel remotely or that travel to other states for short periods of time. The issue of working remotely is obviously if they are not within the state for more than 30 days, they wouldn't be covered. But if they do come in, and there are some states that are asserting that those remote workers still have to pay liability in the state of their headquarters, where their workplace that they are stationed out of. I'm sorry, I hope that addresses your question, but we do not have those reports about voting with your feet, if you will.
Senator Drazkowski.
Thank you, Mr. Chair. Thank you, Mr. Lindholm. So maybe, Senator Rest, maybe you're aware of what is our situation here in Minnesota? Maybe one of the staff can answer the question. If you have a company and the employee is employed for a Minnesota company or Minnesota government, and that employee moves to South Dakota, where there is not a state income tax, could someone characterize for us what that means in terms of, it's related to this bill, but not, and I understand it's not the bill, it's not part of the bill, but what does that mean, and what does our law say?
Senator Rest.
As I, Mr. Chairman, Senator Drazkowski, as I understand it now, that person is subject to Minnesota tax. And in the bill we had in 2023, that income level had to be determined before it was going to be included in their gross income at a level of like $12,000. Similar number, maybe we'll just say $12,000, and now it's estimated by the Department of Revenue that it's at that level of income is at $14,000. What the bill does is make it easier for compliance by counting days, but just as some of the other bills we've seen, it's also scalable. This bill calls for 30 days as a reasonable time. It could be 10 days, it could be 15 days, it could be 60 days. But 30 days, is, equivalent to a month, which could be one trip, or it could be 30 trips, quite frankly. It seems to me it just streamlines it for companies that send their employees into another state that has an income tax.
Other questions or comments from the committee? Senate Rest, Senate File 46 as amended will be laid over for possible inclusion. Do you have any closing
Thank you,
comments?
Mr. Chairman.
Members, with no further business before the committee, we are adjourned.
Thank you.